Hi, I'm Michael Newrock and welcome to the market analysis video for September 6, 2017. Let's get straight to it. I've had a bit of a break. Yesterday, markets were in consolidation and just got back into it today. As well as that, I've had an Italian exchange student staying. My daughter went to Italy earlier in the year, and we're repaying the debt now with an Italian student staying at our place. So I have more of an empathetic understanding of what it feels like to be in Airbnb and Uber. But let's get straight to it. Gold currently and still in an upward conservative market. 4 out of 6 high time frames are pointing up. It's been nothing but up all this time. It's no real surprise given the global events currently right now. You name it. There's been issues where the markets have been a bit skittish. They're running to gold as a safe haven, and not really surprisingly, currently 1,338. We've had some great upward moves in all time frames. This is the 4 hour. On the 1 hour, there's been some great opportunities as well. And okay, so a couple there. And as we drill down, we can see more and more of these opportunities. Another one there occurring. So we've had a little bit of a correction to the downside, but it's been more of a consolidation, more of a drift and consolidation. So right now, just getting back to the 4 hour, I wouldn't be in a position to go long on gold right now. I'm looking for a correction in the market. MACD is still well above the zero line, so is the RSI. Price itself being a leading indicator, the ultimate indicator. Price is telling us that this pair this asset has already rallied quite significantly. So, there's no trade in my mind. Ultimately, it's an upward move, but hang on and wait for some correction in the market. Maybe if the price drifts down, we'll get a lowering of this MACD closer to the zero line and a swing down, let's say around here. 1323 gives you a nice reference point for that high, and another move up. Look for different time frames of what you can get in on. If it's not a 4 hour, the 4 hour will probably collapse at around this level here, 1330, and after that you'll need to be looking at shorter time frames, but I'll tune back in tomorrow and give you an update on it. Euro is finally looking like it's taking off, where 5 out of 6 high time frames are pointing up. You only have to go to the daily or the weekly to see how strong the euro has been moving up. So don't short the euro unless you have a really good reason right now. If it's moving down, get on the sidelines. Don't take the trade. Wait for the market to consolidate. These two here were there was a trend trade and a swing trade to the downside. I can't recall what the market was like at that time. It may have been bidirectional, but still risky because it's been nothing but up. So now it's starting to move up. If you can't get on it on a 4 hour, and remember, you can get in on these trades manually with the go long or go short commands, in this case go long, and I've got a video in the members area explaining how to do that. Otherwise, look for a shorter time frame, see if we can find something. 1 hour has been nothing but trends and swings, so clearly the market is telling us on a technical basis that that this trade is going higher. If you caught this 15-minute, then pat yourself on the back. That's a really nice one, particularly because the market has already gone so high. So when the market moves up, then I always look at dropping down in time frames and seeing if I can pick a trade setup in a shorter time frame. Even on this 1 hour, and even if it's late, because after all, there wasn't a actual valid trend trade at this occurrence. But right here, I would still say that this is a reasonable opportunity. We've got 50 pips for the stop. We've got about 125 pips to this recent high. So good opportunity. Euro's been going up for quite some time. I'm wouldn't be considered crazy to suggest going along at this stage, or at a time where you find a decent trade setup, either trend or swing, after a correction has occurred. And we've had that correction now, so 5 out of 6 higher time frames are pointing up. That's good enough for me. Pound. Now, if you go back to the videos, that's the great thing about having these videos. They're they've got me recorded saying that I've been suggesting that that the euro and the pound is going to flip. Well, I was almost right. The pound has flipped, but now we have the euro starting to move to the upside as well. But ultimately, the pound has started to move back up. It was under pressure for a long time, right along here, and we've had a nice trend trade to the upside. We had another swing which failed. We had this one, you wouldn't have survived that if that had occurred. But it's pretty far from the trend, so be discerning with the swing trades that you take. Try to make sure that they are closer or fairly close to the inception of the trend, that is the moving average crossover with the trend follower changing, and ideally with price fairly close to that initial trend opportunity, which in this case was here. So I mean, this could have gone the other way as well. So I wouldn't even say that this was too far. It was a valid swing trade, but that's the way it goes. In this case, it failed. Trend trade did do reasonably okay. If you had given it some decent room, you would have survived this correction. Otherwise, you may not have. But ultimately, the move has been going up. So sometimes less is more as far as trade management goes, or not meddling in your trades. And sometimes you just got to let trades go, even if they are still compelling you to that they are going in your intended direction. That's just the way it goes. You've got to let some go. But hey, 6 out of 6 high time frames are pointing up. It's a strong market at the moment. Would I buy now? No. I would have, ideally bought here or even here, albeit not a successful one with this correction. But the pound has been moving up, and now I expect it to continue to move up. Of course, nothing moves in a straight line. We have to wait for those corrections. This is really interesting here. I've just changed to the daily on the pound, and you can see that today and on the close of today, we will have a valid trend trade in place. Of course, the indicator displays it earlier if you're flicking around time frames like I have been, but the actual trade will become valid on the close of this bar. So, that is really interesting because we've got a stop of around 150, 160 pips. Remember, this is a daily chart, so you have to accommodate for that, and over 210 pips for the high. Now, if it breaks through, will it break through? Let's have a look at the weekly and see where we're at. Okay, I'll just clean the charts while I'm here. So we're getting a new swing. Take a look at this. The MACD has popped up. It's turned green after a drifting of the MACD close to the zero line. This is what I like. RSI is above the 50. That's good enough. And look at all this open space. I mean, I'm sure there's a joke there, but you've got 200 pips or so for your stop, and about 1900 pips for this high on the weekly charts. There is a lot of room for growth on the pound right now. So watch this pair, and right now it's full on moving in an upward direction. It was under pressure for a long time, and the euro was taking a lot of the benefit to the upside over that, but the pound has re-emerged as a strong contender for a rallying pair. Now, euro pound. This also was moving up for a long time. And again, if you go through the videos, you'll see that I was talking about for some time a flip of the euro pound and the pound Swiss. And that is pretty much exactly what's happened. Now, it's not over yet. I mean, it could easily move back up. We are in a bidirectional market, but you can see here we've got this move to the upside and then a move to the downside. So the trend trade and swing trades in this case were correct. We did have a correction here. Now, the only reason we didn't get another swing here was for technical reasons. The MACD popped up over the zero line, but we're in a full mode of a downward trend at the moment. So will it go lower? Well, I don't know. If this closes right now where it's at or even above, then we could be seeing a possible counter trend move. But really, it's in full flight of the 4 hour. If we get a move, if we get a crossover occurring, then not necessarily that that will be the case any further. And to bring to point, if you look at the 1 hour that I've just flicked over to, this is a tempting trade to the upside. So, as I always say, my only loyalty is to the market. It's almost an affirmation that I repeat 1,000 times a day, but it's a good one. And if you start focusing on what you think the direction is going to be and be stubborn on that, then that's the quickest way of getting yourself in trouble. Think of yourself as a sailor on a catamaran, and you're just going to tack left and right, whichever way the wind is going. Right now, there could be an opportunity to the upside. It is a bidirectional market, so it certainly could be a resumption of the trend. What trend? Well, take a look at the daily. I mean, it's been nothing but up, just like the euro. The weekly as well, it's been full on up, apart from some corrections here and there. So getting back to the 1 hour, it's, even though it's in a 4 hour downtrend, this could change everything right here, right on this bar. What do we got? About another 17 minutes for the close of the hour. And the fast-moving average has already crossed over. This is a really nice-looking trade. Why do I like it? Well, a couple of reasons. This parabolic bell curve, it's not too flat. There's movement in this new trend trade setup. The risk-reward is excellent. I mean, we're talking about 10, say 15 pips to give it a little bit of room under that the slow moving average, which is what I always like. And you've got, almost 60 pips to the upside. So that's a 4 times reward multiplier, 1 to 4 risk reward ratio, in other words. So wait for the close. I mean, this could collapse and prove me wrong, but if the bar closes, around here would be nice, around just back up, flip back on itself around 91.60 would be really nice. So your stop's going to be a little bit bigger, say maybe 20 pips, but you still got a 3 or a 2.5 times reward multiplier. So that's really good. And if it busts through this resistance, well, it's got this high still. So if we can draw a line on it over here. But so we do have a little bit of noise, but there's every reason for it to move upward. Why? Well, back to the daily, nothing but up. We've had a few little bars over here to the correction. Does that mean we should go short? Heck no. I mean, look at it. It's been going up since May. So trading is speculative, but we have a lot in our favor. We have these technical resources to give us the inner workings behind what the hell is really happening. So the 1 hour on the euro pound may be a good one. Remember, on these videos, I'm not giving out signals or tips of what you should do with your trades and your money. I'm just trying to point out decent setups based on the trend Profiteer system. All right, pound Swiss. Pound Swiss has been going down for quite some time, a reverse correlation to the euro pound. It's recently started to move up, and it's now 4 out of 6 higher time frames to the upside. Now, it's interesting because if the euro pound is going to go up, then that usually means the pound Swiss is going to go down. And we've had a consolidation here for about 4 or 5 bars. Now, it doesn't look like any big deal, but each bar is 4 hours. So basically, for the last day, we've just been flatlining. Okay, so we have what is commonly called as a wedge here. So you haven't had a big move down and then a parabolic curve up. You've had this sharp move up, and then you've had this consolidation, creating this moving average, looking like this right angle wedge. So even though it's 4 out of 6, I'm a little wary of that. And even though the pound is moving up, well, it's moved up a lot already. So I'm not entirely sure that it's going to continue to move up, which is why if you're looking at the pound Swiss, I would check out what the euro pound is doing first. And again, they exist in a pretty much reverse correlation state. So just be aware of that. Alrighty, Aussie. Well, 4 out of 6 high time frames pointing up, but it's pretty high in the market. It's been really messy, really jaggedy. It's been difficult to tell, and I'm not really buying it. It is pretty flat on the daily. You can see here we had some nice big moves, no doubt at all. But is this the end? I don't look at fundamentals, but being in Australia, I can't help but hear more of the events that come out. And right now we're looking at 1 in 3 households with mortgages being under stress, and 0.5% of an increase, just 0.5% of an increase, will place 1 in 3 households in stress. Now we've had the mining boom slow down to nothing, and construction is also slowing down as property prices are reaching ridiculous highs. So, and I hate to bring fundamentals into it, but even on a technical basis, look how high it is. It's not the place where I would be looking at getting in on a long. On the weekly, there's more room for movement, and it could continue to go higher. But I've been on the sidelines on the Aussie for a little while now, and you can see this short back here was pretty decent and consistent. But ever since then, since August, it's just been a real mess. It's one that I'm staying away from. If the Aussie Kiwi moves down to the downside, which has just happened, it's still a bidirectional market, so it's not fully over yet. And on the Aussie Kiwi, you got to remember that on the daily, it's been moving up like crazy since June. And if we look at it on the weekly, you can see again we're really in a strong move upwards. So to me, it looks that there could be an opportunity to move down, and I would only be looking at shorting the Aussie if this Aussie Kiwi pair was heading down, which it is now as far as entering a bidirectional market. We'll see how that goes. If it continues to move down, then that's just going to strengthen the case for looking at short opportunities on the Aussie. But right now, I'm a little bit on the sidelines with the Aussie. But however, if you are going long, then you've obviously done reasonably well recently. So congratulations. Now the Kiwi has moved up fairly significantly recently, but that is not really a big surprise. It really was reaching its bottom here. Now I know on the Aussie it's a slightly different picture to the Aussie. The Kiwi has been moving down on the daily. So this last move for yesterday, really, it doesn't change the picture dramatically in my mind. The RSI is still below the 50. The MACD is still below the zero line. It's still very much in a downward move. So I would be looking at shorting the Kiwi with an opportunity, maybe on a shorter time frame. It's still very much to the downside on the daily. Let's have a look at it on the weekly. it's collapsing. This recent last few weeks has seen it real collapse. So if you see the MACD close at the end of this week below the zero line, that's just a further indication that it may be heading south. So again, if we go back to the 4 hour, we can see that it's moving up, but it's not a trade for me. If you see it move back down to here and then swing up, then for sure you can take a trade to the upside. But just bear in mind that there is a lot of traders trading this short. So maybe it's a better idea to have a look at a trade setup that occurs um, to the downside, and that it hasn't occurred as yet. So maybe just a game of patience. Okay, the dollar CAD, it's been moving down. It's been a bit of a Shakespearean story as far as its inability to strengthen when all fundamentals are pointing in that direction. However, there are a few things that have been weakening the US dollar, and I've spoken about it previously. Politically, the country is in a bit of a state, and then there are various other issues. Now there always are, but at the moment we seem to be having some ones that are bigger and overshadowing issues more than usual. But on a technical basis, 4 out of 6 high time frames are pointing down. It's been moving downwards. We've had a swing down. Would I take a trade now? No. It's just way too low right now. Let's look at it on the daily. Again, it's just been moving nothing but down. I mean, if you've been shorting the US dollar, the US CAD in particular, then give yourself a pat on the back. I mean, it's just been an easy trade. But have we? Let's just quickly go to the weekly, because I know I've brought that up previously. This is the pivot low that we were looking at previously, and it has closed below that point now. So um, I just don't like getting into shorts when it's this far low, when it's sitting up against support. I would more be comfortable sitting on the sidelines and see if we have a turn. If we do have a turn, then we're sitting at around support. So if it came up around here, 1250 maybe, there'd be a nice, say, 50 pip stop and a 200 pip target to this recent high and even above. So that wouldn't be your first target, of course, but it's great to have a reference point there of where your target is 2, 3, 4 times more than your stop. So I'd be still looking at this market changing to a bidirectional and looking at a long trade at that stage. I just think it's been oversold, and at this stage, a correction wouldn't be a surprise. Now, I know some of you took this buy here and did really well, and congratulations if you're locked in profits, because as a trend trader, that's what you need to do. As this example here displays, you wouldn't have wanted to be caught out on that. What do we have here? All right, let's have a look. We've got the pound Aussie. Put this to the side. And I'm interested in this. I've been interested in the pound Aussie, the euro Aussie, the euro Kiwi, and the pound Aussie for some time. They've been going really well to the upside for quite some time, and I'm not changing that position, even despite the recent falls. That just gives us another opportunity to go back in long, and the reason for that is that overall they are generally going along. So let's take a long trade on this, and we can check back tomorrow to see how it goes. Now, this isn't the tidiest of trades. Usually I look for a reference point that's a couple of times bigger than the stop. The 60 pips thereabouts to the stop currently, and only about 40 pips to this high. So I would be really tempted to move to adjust my settings and to move the stop to break even just before it hits that high, because the reward is if it breaks this high, we've got another 170, 180 pips to go. So it could be a really good one. But let's get back to my sequence here. Dollar Swiss, reverse correlation to the euro. Euro currently is going up, and has been for some time. Dollar Swiss, apart from this correction, just like the euro, has been going down. So I have no real reason to think otherwise at this stage. Uh, Dollar yen, I know a couple of guys in the members area did really well on this. It's gone really well. If you took this short, say, well, currently about 130 pips to the downside. What will it do from here? Well, it's had some nice movements here, down, up, down. We had some consolidation here, a nice upward move here. Swing failed, but if you had caught the trend, then it wouldn't have bothered you. And then the trend and the swing have gone well. So maybe a correction and then shorted it again. I wouldn't obviously be looking at any upward move unless we get some serious indicators to think otherwise, like a moving average crossover, basically a valid trend trade to the upside. You can see here the daily trend trade. This doesn't happen very often. I mean, it was fabulous here. It was fantastic over here. But one of those Murphy's Law things, it just didn't succeed at this stage, and it's collapsed since then. So I have the feeling that it's going to reconcile. We are getting close to this low here, and it's pretty much touched it. So 108 is the number to look at. 108. We're almost there now at 108.70, or just below. So maybe step aside on this trade and see what happens over the next couple of bars. Look for, if you see it pushing upward there and you see this change to bidirectional, then maybe flick over to the 1 hour or the 30-minute. Very, very flat, as you can see here. I'm not even going to go to the 30-minute, to the 15-minute. There's just nothing there at the moment. It's flat as a pancake. Let's see what happens. Euro, on the other hand, has been moving up despite this move down. It's bidirectional. It's been moving up for quite some time. You can see here on the daily chart, it's been moving quite heavily up since April. It's had these consolidation patches, but overall, the overall move has been about 1,500 pips. So, maybe a 4 hour, maybe but by then it might be a bit high. We are in bidirectional market already, okay? 3 out of 6 are pointing up. So maybe a 1 hour. Well, there you go. Right this bar, wouldn't you know? It's just occurred in the last 4 minutes. Because I changed time frames, the indicator actually pops these up prior to it being validated. The EA, or the trade assistant, will provide us with the execution of that trade if this candle closes where it is or above. So this could be a really nice one. Euro yen, I've talked about this previously as far as going long. Don't think it was last week. I think it was the week before, and it did. I'm not saying it will this time, but 30 pips for the stop, and you've got almost a couple of hundred pips for the ultimate high. You've got these highs along the way. Maybe here, even at 30 pips, just along here. This support, and this is where the market opened on the market gap on Monday. Maybe would be a good time to move your stops to break even. Then if it continues to go through, put your party hat on it. It could certainly continue. Pound yen, it's under pressure. What can I say? It is under pressure. MACD. If it swings down, then I would be looking at a short. Every other condition is in place. 4 out of 6 high time frames are pointing down. RSI is already below the 50. MACD is below the 0 line. Changing of the MACD to red could be a nice short. If it continues to move up, then it could be a trend trade. Hence, my only loyalty is to the market. Okay, Aussie yen. Aussie yen was a little messy over here, yes, Spacey, I feel for you on this one. I know you were taking this one as a short. Uh, it happens. I don't know if you would have survived this one, but the Aussie overall, as I was saying before, is a bit of a tricky one at the moment. Although this was a fairly clean trade at the time, and this pretty much occurred due to the Reserve Bank of Australia yesterday having their monthly meeting, and once again, what a surprise, deciding to sit on their hands and saying we won't do anything because they're scared as hell that the property market is going to implode. The average price of a house in Sydney right now is 1.1 million, and for 1.1 million in some places in the world would buy you a bloody island in Bermuda with a really nice house on it. But unfortunately, that's not to be in Sydney. We're talking about a piece of a really rundown old home. So that gives you a bit of an indication of what the housing market is in the land down under. So, there is trouble behind the doors. Kiwi yen, it's been under pressure, and I don't see any reason for really looking at this. It's already down low. I'm not interested in this trade. CAD yen, the CAD has been supported recently because the US dollar has been falling dramatically against it, so that US CAD has had a knock-on effect with other currencies. So I'm not entirely convinced of this short going down. I would tend to look for maybe another opportunity if the dollar continues to be under pressure, particularly with the CAD. Maybe like a 15-minute. Didn't succeed here, but it may succeed here. So by drilling down, you see these opportunities. So not really on the 30-minute, but let's go back to the 15-minute. You can see here that what's the risk in this case? The risk is about 10 pips. What's the reward in this case? Well, if it passes this 10 pip high here, we've got about 50 pips. Okay, 10 pips versus 50 pips. In other words, I risk 10 pips to earn a potential of 50 pips or higher or lower. I mean, that's trading, but you need to get your risk reward sorted out first. So, this one, I would see as a potential trade. CAD yen's a little late. You could have got into it, 2 or 3 pips earlier, but still, reasonably decent trade. The thing that I don't like is it's had this consolidation, so it could very well easily continue this roller coaster ride. But for when the risk reward is there, it's worth a shot. Swiss yen, also downward, but we've had some recent moves upward, tiny, but you have to drill down again to see what's been happening on those shorter time frames. And you can see here on the 15-minute. Let's have a look on the 30-minute. Okay, 30-minute, and it's a bit messy for me. It's one that I would probably stay away from at the moment, but it is going to follow fairly similar price action to the euro yen. Just keep that in mind. Okay, Euro Aussie did really well with this over the last couple of weeks with these trend and swing trades, even over here. I mean, they were just definitely the trades of the week, up to 300 pips. Will it do it again? Well, 5 out of 6 higher time frames are telling me that this is pointing up. So why would I think otherwise? Let's drill down to say 1 hour and see if we can find an opportunity. Well, this ship has already sailed. You can get in on it as a manual trade, but it's already 50 pips up, and this is just a dream trade. I mean, very little risk. Let's have a look at it, and hopefully by going over these again and again, you get to see what I consider a decent trade and what I consider to be, not. What we're looking at, 15 pips, maybe 20 pips if you wanted to be generous on your stop, and you're looking at about 80, 90 pips on your reward. So what's that? 4 or 5 times your reward. It didn't go not more than 1 or 2 pips against you. I mean, this is what, if you could do this every day, then, you know, come back and contact me, and let's set up a another service together. I mean, this is what dreams are made of. So if you can identify these opportunities, you have the technical resources, gives you an edge over just guessing, right? That's the difference between trading and walking into a casino. You have a lot of information at your fingertips, and this one definitely looks like a decent opportunity to me. If you took this Euro Aussie 1 hour, then congratulations, you're doing really well. Pound Aussie that we took earlier, sitting on where we had it. Pound has been going a little slower than the Euro, which is what I've been repeating over the last 2 weeks. But you know, we could see this pop up pretty dramatically. It'd be nice for my theory on the Aussie, see that come true with a weakening Aussie. That's only going to help the Euro Aussie and the Pound Aussie. Euro Kiwi, up, up, up. It's had this correction. This is when you get in. Okay, you don't want to get in when it's right at the top. And if you didn't make this swing or this trend, then try dropping down to a shorter time frame. Let's have a look at the 1 hour. Okay, it's already gone. But again, you can get in on it on a manual go long command. And there's plenty of opportunity to the upside still. You know, we're talking about from where we're at now, we're talking about another 90, 100 pips to this top of this consolidation area. Pound Kiwi, same thing. There's no trade here on the 4 hour. It's bi-directional. But if we drop it down to the 1 hour, okay, we can see some opportunities. Not as compelling as some of the others, but, you know, they're still there. Okay, so let's just wrap it up. Aussie Kiwi failing. It's certainly looking short. Kiwi CAD, Euro CAD. This one looks interesting, and Pound CAD was brought up in the members area earlier today. I thought it was pretty good. I did mention that the daily and the weekly were downward. Let's have a look and see what I was talking about. Okay. That's what I'm talking about. Since May, it's just been going down. Okay, so could it go up? Yeah, sure, it could go up. But there's a lot of money on the fact that it's going to go down. Having said that, it's really, really low. And take a look at this support over here. Right over here. Let's see if I can get that crosshair working. Oh, I think my oh, there it is. Okay, so right down here, and where did price come down to? Oh, what a surprise! Within like a pip of that support. Well, you know, it found the low here. It retested it here. This is a bit of a flip of a coin, I'll be honest. There's a decent reward to the recent high, and a decent risk reward ratio, so I'll give it that. But whatever you do, I would suggest moving your stops to break even pretty quickly, because you know it is a bit dicey when you look at that daily chart, moving against your long position there. It is very much still in a state of being under pressure. So if we just look at this Aussie one more time, I know it says 4 out of 6, but nothing there. Let's leave it at that. Thanks, guys. Appreciate you tuning in. Till next time, good trading, live well, and I'll see you soon.